Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome to the 24th episode of the Wall Street Lab podcast. This is Lucas, and today I'm really excited because we are getting into the topic of corporate venture capital. It's a topic that we've been looking to cover for a show for a really long time, and now we have the perfect guests to have the conversation about this with. So in order to cover this topic, we have invited Kerstin Eichmann and Moritz Jungmann onto the show. They are both a part of the Innogy Innovation Hub, which is the corporate venture capital arm of the Innogy group. Innogy is one of the largest players in the energy markets in Europe. It also used to be part of RWE, which is a huge German conglomerate. In the show, we cover a variety of topics ranging from the corporate venture capital structures, how corporate venture capital differs from regular venture capital. We get into the activities of the Innogy Innovation Hub, where they see the future going forward, and how they integrate the startups that they invest in into the activities of Innogy and how they can offer support to these startups. So really exciting stuff. I hope you guys enjoy the interviews. And if you like this show, please leave us a 5-star review on iTunes. We really appreciate this. It really helps us to grow this show. So if you have a moment, it's just a few clicks away. But now, without further ado, please enjoy our interview with Kerstin Eichmann and Moritz Jungmann. So, hello Kerstin, hello Moritz. It's a pleasure to have you here on the show, on the Wall Street Lab. Why don't we start off with where we usually start these interviews, with some personal introductions. Maybe you could tell our listeners a little bit about where your background personally lies and what have you been doing before jumping into this space of innovation.
Ladies first.
Yeah, so it's a pleasure to be here. Thank you, first of all. So my name is Kerstin Eichmann. Before I joined the Innovation Hub in 2017, being responsible for the machine economy team, I was leading developer experience team at Microsoft in Munich. And before that, I have been working for Bank for more than 4 years, where I got introduced into Bitcoin already in 2011. And that basically was for me the inspiring moment when I thought, yeah, this should be something I should focus even more.
Yeah, I'm Moritz. I'm a portfolio manager here at Innogy Innovation. I've been an entrepreneur before I joined Innogy. I was in the e-commerce space and in an analog coffee shop space. Joined last year, taking care of growth and very focused on topics all around blockchain investment.
Perfect. Thanks very much for that. And maybe why don't we jump a little bit into Innogy Innovation itself? Can you tell me how this started and what is the structure behind Innogy Innovation and your ties with Innogy as a group as a whole?
Yeah, the Innovation Hub was established in 2015. And back then, we focused on business model innovation, and mainly it was driven by the first blockchain initiatives, where we decided that there are very interesting verticals, not only limited to energy, but also to mobility and even 3D printing. And besides of that, we decided to have 5 focus teams back then, Smart and Connected. These people focus on the PropTech area, urban and exponential. This team was looking into the space, how big cities will look like in the future. Then another team is it's a digital disruptive team. Their focus is to build the new utility of the future. Their focus is energy. And the machine economy, which was established in the late 2016, right? So the Innovation Hub is a 100% owned daughter by Innogy SE, but we have the mandate really to drive game-changing ideas forward that can basically revolutionize existing business models or also industries permanently. And here we have the mandate to do to make pre-seed and seed investments basically in startups where we believe that those investments can drive the future of energy forward.
Very interesting. And so it looks like you kind of created this vision of the future that you would be looking to pursue as a company, which is really interesting. And I would love to jump into a little bit of your types of investments and this corporate venture capital structure. But before we do that, you mentioned these different types of teams that you have created to pursue these startups into space. Could you give us a few examples of the types of businesses or specific examples of startups and what they do that you would be supporting?
Yeah, sure. So in the Smart and Connected team, for example, where the team is focusing on PropTech and digital twins of buildings, there is a startup called Basking, and their focus is to provide an analytics platform for co-working spaces. And there's also another very interesting investment. The name of the company is Visualix, and they also provide online information based on augmented reality principles, that you have a personal digital assistant by which you can figure out where you are and what should be your next room or so. In the digital disruptive team, for example, I would like to mention Heliatech. They provide very ultra light, thin and flexible photovoltaic. So this is kind of also could disrupt the entire photovoltaics industry. And with fresh energy, which might be also popular in the German market already, with their solution, they want to provide more transparency in the energy market when it comes to the entire billing process. In the Cyber Ventures team, their latest investment has been Patronus. Their solution is to provide website protection. So they can provide automated pen tests, for example, and this is also related to the energy market, as many transactions are initiated via the website first. And machine economy, our focus area. Yeah, let's also talk about this. So here, the vision, first of all, is that we want to turn each device, each IoT device in an economic device, basically, because we believe that a machine will be able, for example, to pay its assembly, its maintenance, its energy at a certain moment in time autonomously in exchange, for example, for other digital commodities such as compute power, data, and bandwidth. And here we already have made several investments. So BigChain.De, for example, has been one of our first investments in the decentralized database space. Maybe Moritz, if you also would like to add some other portfolio startups here. We have Neufund.
Yeah, we invested in Neufund as one of the only corporates that has invested in a token platform. We've also looked into CryptoWag, company from the Valley that is trying to enhance the capability of putting data on a blockchain. As this space is probably the youngest, and with all the rising ICOs from last year, the one that is or wasn't looking a lot into institutional investors, we haven't made too many investment in that space where blockchain is dominant. But we'll see a big change in 2018 now that this market is getting more mature. Our deal flow is quite full of opportunities. We'll have to figure out now what's the best strategy to handle that in the end. But overall, with all the investments on those focus areas, we see 4 mega trends, more or less, 4 transitions that go ahead. That is a financial transition, an IoT transition, an energy transition, and a trust and control transition. And within this transition, all the business verticals we know, like ourselves in the energy business, we'll see a big trend towards convergence of those industries. And those convergence will build on horizontal tech layers, and those are the ones we try to understand and to find the best way to have a sustainable investment opportunity.
To add on this, for example, if we do the scouting, if we want to identify new startups, our opportunity spaces as of now is the middleware component, where we already have, for example, Motionwerk and the Energy Web Foundation. Both of them, they provide the infrastructure for applications. We focus on the service layer. Here we are interested also in startups who provide a solution that could simplify the ICO process, as we think that new financial vehicles or a new native money to the Internet of Things is also necessary for our machine economy to come true. That's why we also invest in service layer components for the entire crypto space. And last but not least, identity is our last opportunity space, because, as I said at the very beginning, in order to provide a new economy of things or that entrepreneurial attitude of machines, it is necessary that every device has its own unique encrypted identity, including a data storage component with BigchainDB, for example, or IPTP.
Really exciting, and it's actually quite amazing how many verticals you have within this structure. Maybe if we jump in a little bit, there are so many items here that I would like to follow up on, but maybe we could jump into how do these startups that you invest in and help develop, how do they tie into the activity of Innogy as a whole? So the understanding behind corporate venture capital is, as I would understand it, is the combination of supporting the startups and at the same time bringing them in to provide value to the company that provides capital for these investments. Could you maybe elaborate a little bit how this relationship between the startups joining a platform looks like with Innogy itself?
So first of all, we have a strategic interest to identify great startups, because Innogy has 4 strategic goals. We call them the 4 Ds. It's decentralization, because we have so many different assets out there right now. 3 million solar plants instead of having only one power plant, one centralized power plant. There are so many decentralized assets out there which have to be managed, and maybe with a new technical backbone. Then we have the second D stands for the digitalization, meaning how you could connect a solar plant to a database or to provide a digital twin of a solar plant. D number 3 is democratization, that everyone should be, that every person on the planet should be able to also sell, access energy to its neighbors. So a new income stream could be realized here. And last but not least, D number 4 is decarbonization, that we are also interested to, for example, to build new smart buildings where we could think of sustainable energy, or where we would like to reduce the amount of energy that is going to be used to provide the infrastructure for a smart building. And so with our portfolio approach, having said that, we need those startups to accelerate the process within our core business to be more innovative, to be more digital, because this is something we cannot do by ourselves.
And I think it's, of course, on the one hand, we have this theory of how to actually create those bridges between our portfolio and whatever our core is actually looking for. And then we have the practical situation of today. And I think here it's quite clear. If we look back, we've been running this program now for a little bit of more than 2 years. We have an extremely growing portfolio with around 60 plus companies now. So we're still in the making of finding the best ways to actually facilitate those bridges between both units. And we'll just start it this year creating portfolio days well, with a buddy system and had quite some success with it. But it is also clear that between our actually vision, which is really Horizon 3 driven, so really futuristic, and the problems of today of our mother company, of our core business, there is quite a gap. And then finding a buddy who's actually willing to invest time and resources on proof of concepts for a company that will help you find a solution of a problem in the future is certainly something that needs a close attendance, somebody who's trying to make this fit work. And this is where we have those growth or portfolio managers in place, where I more or less jump in with my colleagues, where we actually try to find the best way or path for both needs.
That's very interesting to hear. And from the perspective of a startup, if I have a decision to make between going for accepting money from a corporate venture capital firm or a traditional venture capital firm, what would be the aspects that I would have to consider in your view? And what could corporate venture capital offer more than a traditional VC would?
It's always, of course, difficult, as we're coming from the CVC side. For us, the CVC is more than just smart money, it's strategic money. So we'll actually try to promise at least the benefit of being the gatekeeper towards those industries. And we'll see the potential of it, but realistically, we're not there yet to actually leverage all the possibilities we could, just because the corporate is still developing. Companies like us are still very young and still developing. So I think today a VC runs much more smoothly because they've been doing it for quite some decades now. And CVCs like us, we're still in the finding phase what the right structure will be. But we'll definitely see, in the end, it's me. I definitely see a great benefit actually for the future of CVC structures that can actually leverage a product much more through their network, not only to their own vertical, but also to other verticals. And with innovation needed, full pockets of follow-up investments that are not depending on other stakeholders.
To add on that, Moritz also already described it very well. Strategic money means that we really have a deep interest to connect our startups to the core business. Of course, it might take some time because we have more than 30,000 people working for Innogy, but there is a great momentum right now that they also want to figure out what could be a potential value add for retail. How will the future infrastructure for energy will look like? What's the role of P2P energy trading? Do we also need some AR components to help people when they want to set up their smart home appliances? And then I would also say that with the machine economy portfolio, which is very complementary, so we have different components. And if we connect the startups, if we connect them, and if we support collaboration within our portfolio, then we also believe that we have that there's some leverage potential there. So we have the middleware solutions, we have developer tools like with Cryptowerk, we have a database solution with BigChain.De, we have new financing vehicles with Neufund, with Xtech we have our first crypto exchange. And if you only think about all those tokens that most likely will be issued soon, because all of those startups are looking into that space as well, we could provide with our own crypto exchange a first gateway for the secondary market driven by our portfolio itself. Our Motionwerk, for example, is using the infrastructure of the Energy Web Foundation. So here we think it's that kind of building smart digital twins with our own portfolio. Yeah, we can also shape the ecosystem that is out there.
Mm-hmm. And do you also cooperate often with external partners?
So I think for us, especially within our team, it's very important that we're open and that we're seen as a player that has a role model character, but that is not very isolated in their space. So we're open for all kinds of partnerships within certain areas of technologies, but also, of course, in terms of co-investments. But of course, we're always focused more on partnership and cooperations where we can actually leverage our portfolio or ideas that we see fit for go along with our vision.
Maybe only to add on that, of course, it's necessary, as Moritz said, that we have to educate our people from the core of the people who are responsible for a transaction. The more in the blockchain field, so our legal department, our tax department, on a regular basis, we invite them to tax events, legal events, that they also get a better understanding what's going on in with regards to regulation. So here it's always that, as Moritz said, education, stakeholder management, connect the dots. They have to be inspired by people out there, by like the Nina Siedlers of the world. So it's not that we can work in a silo, but we have to have open APIs to every direction out there.
Mm-hmm. Now, machine economy. Let's jump a little bit into that, Kerstin, because this is your expertise. I would love to pick your brain about this topic. What is something that you see that really excites you in this space, and where do you see the future going in this particular vertical? You mentioned we would probably be seeing a lot of blockchain machine having transactions between one another. What is the future there, and how do you imagine the future?
Yeah, that's a very exciting topic. I mean, what is the idea behind machine economy? We want to have the building blocks that we can turn every device into an economic entity. So the idea is that a machine at a certain point in time will be able to spend money and to make money by itself. And so there are also some interesting technologies out there provided by companies like Slockit or Parity, who are able to provide light clients that you can insert in an IoT device. It has its own wallet that it's able to act like an entrepreneur. And if we want to turn that vision into reality, we always have to ask ourselves, what are the important building blocks for a machine economy? And here we love to use our Maslow for Machines framework, where we say, okay, the first basic need for a machine should be energy and, of course, also bandwidth. Otherwise, the machine simply can't work, because energy is like the digital blood for a machine. The second layer is related to safety and security. So here we think that we need a trusted environment, a trusted execution environment for encryption, for processing power, and the next layer should be related to the question of social belonging. A machine can only talk to a car can only talk to a charging pole if it has its own identity. So this is what we call the social belonging between machines, machine to machines, or machine to machine communication protocols, and machine to machine protocols where also data, any kind of value like data could be executed, could be transferred. And then we think, of course, this world also needs a framing which we call self-esteem, where we think, okay, we need some machine learning principles, that a machine is able to self-optimize itself. And the last part of this very exciting vision is more or less, it's the DAO. It's a decentralized organization that could be driven by machines, or a consortia of drones, a consortia of cars. So everyone who has read the wonderful book Darknet and Daemon from Daniel Suarez has a glimpse, or has a picture in mind how also those communities of machines could work together and they can form a new economy of things.
And coming from the energy space, I think for us, out of a business perspective, this whole vision is crucial, because on the one hand, we're looking into a more decentralized world where everybody becomes more or less of a prosumer. He's producing energy, he's saving energy, and in best case, if regulation lets him, he's trading energy to whomsoever. So we'll probably see a shrinking number of customers that actually will need our electricity. But on the other hand, there will be so many more new players, autonomous items, autonomous vehicles, autonomous machines, whatsoever, that will run through algorithms to find the best power source for their actions. And here we see again why we are in this space and why we want to be a leading role within at least the European ecosystem to understand what are the business models behind it, where is it moving towards, and what are the building blocks within this vision we can invest today and at least can expect some revenues within those building blocks, although we know this autonomous agent vehicle will not be there by the next 5 years. But let's see what's happened within the next 10 years and 15 years.
Yes, that's a very exciting topic. How do you feel about regulation in this space? Is the world of politics and regulatory approvals ready for introducing this machine economy?
That's a very good question. I would say not as of today, but of course, not people like us. We think about machine economy. Others call that the robots will take over. Also, a robot should have its own passport, or we have the famous human robot, Sophia. Of course, we are really at the very beginning, but on the other hand, we also see that the conventional energy market that we have here in Europe is very regulated, still. But there are activities in place where people also from the government they will decide very soon how they could also make the markets more free and how they could reduce the regulatory restrictions. I mean, we are thinking this machine economy, it's like a time horizon between 5, 10, or also 15 years, and maybe also much longer.
Yeah, and on the other hand, we'll have to see where will this innovation actually drive the most, and it won't probably be happening in such a regulated environment as we see in the Western world. But where the need is much higher, probably technologies, if affordable, will be adopted much faster. And then it will be the question, as soon as it's adapted somewhere and people recognize its use, and regulation will loosen then by the state, I think then it will be important to actually not jump on that technology by then, but actually be one of the biggest stakeholders within that technology or within that new technology layer to actually leverage it the most.
It might be Singapore, maybe the emerging markets, maybe this new vision will be explored first in Asia, and then maybe it comes back to Europe. Yeah.
You also mentioned the importance of blockchain within your operations. You're investing into quite a few companies in this space. And from the financial side, we've been hearing about the amazing solutions that blockchain could bring. What is your perspective on this, and why are you investing so much into this technology?
Yeah, so I mean, if we assume that we have more than 50 billion connected IoT devices, we have to deal with a huge quantity of transactions. And we just believe that with the old mainframes, with the old infrastructure that we have as of today, we cannot handle those. And also when we think about autonomous cars, then we also think that we need another system that is prone to attacks, that cannot be tampered so easily, where we also believe that blockchain could be a solution, or the new infrastructure, that the new infrastructure should be decentralized, that it's not so easy that someone could hack the system. And the second thing, which I said before, we want to support machine-to-machine communication, meaning we also want to avoid that there are thousands of third parties being involved, because a transaction should be settled really in nanoseconds, and a machine should not go to a bank and ask for permission. So here we also think that we need those, what we have in the financing space, peer-to-peer banking, peer-to-peer lending. We would also love to see that in the machine space. Direct communication, direct business between assets. And here, blockchain maybe is the best starting point.
I think for us also the blockchain in definition is not only the blockchain we know through the Bitcoin, but it's much more the whole the technology that arises through a decentralized network that is not owned by a central entity. And this is, I think, what we try to understand through our investments, which we analyze in that way, to get this understanding on how high or how big is the potential actually on the blockchain, or will it be something like the Tangle or a hash graph or whatsoever. But just for the understanding for us, this is the whole space of that technology that is rising, which we define as the blockchain space.
Mm-hmm. We see so many technologies emerging, some dying out quickly and some thriving enormously and having entire systems built on top of it. So when you're dealing with so many different technologies that are in its initial stage, how do you differentiate, or what is your methodology when looking at the technology to determine whether this is something worth pursuing in the long term, or whether this is something that is not going to thrive?
Yeah, also here we use our ecosystem, so we are well connected, and each time when we are looking into new technology, of course, we ask our friends and family, let's call it this way. We also have our tech guy in the team, so we never invest in a startup without doing a tech due diligence. Then we also look at the GitHub repository, so what's going on there. If the GitHub repository is empty, so what I want to say is we want to see some traction code-wise, and we also want to see some traction represented by the community, meaning Twitter we look at the Twitter followers, we look at the Medium articles, we want to see that. So part of the due diligence is there already a vivid community that supports this idea. And of course, at the end, because it's also every time it's a little bit risky with these new things. So there have been ones that have been hyped last year, and this year some people figure out, no, it's not working. But staying in touch with the community, I would say.
Yeah, same for me. It's probably the most important part. Being accepted as a part of the ecosystem, being approached, and therefore being in the room with the people you believe in and you trust in, and then getting into a discussion with them and seeing which technology will drive next. Where will there be a shift? Are there any new know-how about the capacities and capabilities of a technology? This is what we try. This is, I think, again, a CVC has much more resources to actually be part of that ecosystem, and in terms of manpower, because if you don't have that, then it is just really difficult to keep up with with that pace in that market. So I'm very happy for being with Innogy Innovation, because we actually have the backup by our management team to actually thrive those ideas and actually be part and be recognized within this ecosystem.
Great. We typically have a section in this podcast to discuss different ways of pursuing the career choices within a chosen field. Maybe you could give us a few pointers in terms of how would one get a job in a corporate venture capital firm, and maybe what would be the resources that a person would need or that could leverage in order to study and learn new skills to pursue such a career?
That's an interesting question, definitely.
Yeah.
I think in the end, we're an organization that is driven by lots of passion, lots of interest in new technologies on the one hand. So it's very entrepreneurial, straightforward, let's put it that way, because even though we have, of course, like hierarchies and stuff like that, but with the ecosystem approach, we really are looking for people that are thriving and are eager to understand new technologies. On the other hand, we're VC driven, so we really need analytical thinking people that can analyze and can understand the difference between how good a team, a business model, their customer need, problem solving matrix looks to actually help us understanding getting the best deal out of our deal flow.
And to add on that, so if some people are interested in the blockchain field and let's assume there will be another corporate venture fund like Innogy who also look into that space. I think people who want to understand the taxation framework better. So we really need young experts in the taxation space of crypto, the classification of crypto assets. Also, we a lot of legal support in that area. If I would have the chance to, after university or so, I would definitely look into these new niches, new fields of interest where the entire VC space, the sooner or later, will need some support. Taxation, legal support, stuff like this. Also, programming skills, solidity, whatsoever.
Very interesting. Perfect. So I would like to thank you guys very much for coming onto the podcast. And, well, I wish you a great day.
Thank you.
Thanks for having us.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
Disclaimer. Information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. This podcast is for informational and educational purposes only, and it does not contain an offer to sell or buy any sort of financial products, and should not be treated as advertisement for such. Any copying, distribution, or reproduction of this podcast without the prior permission of the creators of the podcast is strictly prohibited.